So this has got to be the first time in modern history where a 10% decrease in home values just doesn't really seem like a big deal. Now, don't get me wrong, 10% accounts for a lot of money and is a huge deal if you're looking to buy a house right now. But let me just explain what I mean here. So let's just imagine you're a baseball fan. You're down 0-4 and your team gets a home run, getting them 1 point, making the score 1-4. You love to see them get the run, but being down by 3 points is not exactly where you want to be. And that's just kind of like what this 10% decrease in home values is like. Sure, 10% down, but it was up 40% from the previous 2 years, so it's only about 25% of what it's increased over the 2 years before that. I think we can agree that's far from a housing crash, but maybe a step in the right direction if that's what you're looking for. Which makes me wonder, what are you looking for? Are you a homeowner hoping that home prices just continually go up? Or are you looking to buy a house and hoping for the housing market to crash first? Let us know down below what team you are on. So the question is, where do we go from here? Like, where's the game gonna end up? It seems as though interest rates are starting to stabilize, but there's still plenty of talk of an upcoming recession in 2023. So that's exactly what we're talking about. What is gonna happen in 2023? To give us a sense of where we're headed, let's look at where we're at right now. Currently in San Diego County, we have 3,991 homes for sale. That means there are just under 4,000 homes currently for sale and ready to accept offers, which is down 6% in the last 2 weeks. To give some context, this time last year, there were 3,591 homes for sale, so a little bit less, but it was also a very, very hot market. And the 3-year rolling average before COVID, which is when the housing market was a little bit more normalized, was 5,905 homes for sale. And I like going back to that time because it was a little bit more normalized. It wasn't this crazy, crazy buyer's market and whatever we're in now that we're dealing with ever since the whole COVID situation. That means although home prices have dropped around 10% in the last 6 months, there still aren't a lot of homes for sale. Sellers just aren't selling. They're kind of just strapping in and making do with what they have because a majority of potential sellers have an interest rate about half of what it is today. They're down at 3% or sub 3% when interest rates are around 7. I guess they're technically under 7 now, which we'll talk about a little bit later, but they got up past 7%. And the second crucial point to understand, which is related to supply, is called months supply of inventory. This has got to be my favorite statistic when it comes to the overall health of the market because it compares the relationship between supply and demand. And it's a lot more in real time. However, for these statistics, you're looking at how many homes are currently on the market and how many homes have accepted offers. So you're not 30 days back, you're looking at what's happening right now. So currently in San Diego County, we have 1.6 months of inventory. And what that means is if no new homes hit the market, it would take 1.6 months for all those homes to sell if the demand stayed the same. Does that make sense? I hope that makes sense. And the fact that it's comparing supply versus demand, like I said, it gives you a really strong picture of the health of the market. And the higher that number goes, let's say 6 to 12 months of inventory, that means there are way more homes available than the demand is justifying. The general rule of thumb is around 6 months is when it starts to turn into a buyer's market from a seller's market. But today we only have 1.6 months of inventory, which is down from this year's peak of 2.1 in July. And over the last 2 years, since the beginning of 2021, we've hovered around 2 months of inventory. That's gone up, that's gone down, but the average is around 2%. So we're just under that average right now. But get this, back in 2009, we peaked at 37 months supply of inventory. 37 months supply of inventory. I feel like I need to say that again. And between 2009 and 2013, we averaged over 20 months of inventory. So we're talking astronomical numbers compared to where we're at today, which means in order for us to get back to that level, if demand stayed the same, supply would have to increase 15 times from 4,000 homes to 60,000 homes available for sale. That's a lot of yard signs. Now, I know you're saying, all right, Dan, we know you're an active real estate agent. Of course, we're going to use you when we're ready to buy or sell a house here in San Diego. But as a local expert, you aren't factoring in the major economic factors. What about recession? What about interest rates? Sure, those are the wild cards. I don't know what's going to happen. Nobody knows what's going to happen. But I can give you some perspective based off of recent information. For one, after many, many months of Fed rate hikes, Jerome Powell, the Fed chair, just announced the Federal Reserve will slow down the pace of interest rate hikes. saying the time for moderating the pace of rate increases may come as soon as the December meeting, which is right around the corner. Now, to be fair, he did say that we have a long way to go with our fight against inflation, saying specifically, history cautions strongly against prematurely loosening policy. But overall, this is great news for mortgage interest rates because they're not directly correlated with the Fed fund rate. They're really more correlated with the future projection of where the Fed fund rate is going. So when the rate increases end up being less than the market expected, we can tend to see mortgage rates actually decline. Currently, mortgage interest rates are down almost a full percent from their peak back in November, and they seem to be stabilizing. Now again, I don't know what's going to happen. They could continue to go up, they could go down a little bit, but seeing them stabilizing now, hearing this from Jerome Powell, these are good things. These are good things. And as far as a recession, I'm starting to see articles like this claiming there is a recession coming in 2023 if we're not already there. But when you actually look at the analysis, they expect a mild recession in line with the 1969 to 1970s recession. For those of us that were not around in 1969, this was a recession that lasted 11 months and triggered by the fiscal tightening of budget deficits after the Vietnam War and the Fed Reserve raising interest rates. Sounds a little bit familiar. So we started 2022 literally the toughest buyer's market in San Diego's history. I mean, the toughest buyer's market in San Diego's, let's say, modern history. Record low inventory, way too many buyers. It was almost a guarantee if you put an offer on a property that you would be competing with 10, 15, 20 plus offers. I put in offers where we were one of 50 offers. And from that to a rapid increase of mortgage interest rates from 3 to 7%, which definitely cooled and mellowed out home values, even bringing them down a little bit. But here's what we have now. Buyers and sellers, they seem to be adjusting to the new normal. And the buyer opportunities, they're starting to cool off a little bit. Which means here locally in 2023, I'm not expecting home prices to drop much more or inventory to skyrocket. We're just not seeing it happen. Why that's important? Because if you're sitting on the sidelines waiting for the right time to buy a house, I truly believe that this is it. Which is why my wife, Stephanie, and I were touring homes just 2 days ago. There's no need to be in a rush if you can be flexible with timing, but be ready and start keeping your eyes open for the right opportunities, because I don't think they're gonna last much longer. Now, if you're considering selling, I don't think there is as much of a rush. Even if prices go up a little bit, the benefit of selling will outweigh the negatives of buying in most cases. In fact, in a lot of scenarios, it might actually benefit you as a seller to wait until more homes start to hit the market March, April, and May. That way you can actually find something that you can move right into, because right now there aren't a lot of options. But if you are in this camp considering selling your house, this would be the time to start prepping for your sale. So how you are positioned to stand out when you are ready to sell is extremely important in this market. So figure out what needs to be updated, fixed, repaired today to maximize your value whenever you're ready to hit the start button, which happens to be a service my team and I offer. So if you are considering selling your house in the next 6 to 12 months here in San Diego County, or looking to buy a house, maybe this insane, ultra luxury, mega mansion estate, reach out. Our contact info is down below. Thanks for watching. We'll see you next time.